If you're worried about what might happen to your money in case of a lawsuit, a divorce, or unexpected health issues, you are not alone. These events can hit hard and can come without a warning. At least from a wealth structuring perspective, there is a simple way to protect what you have built. It's called a Dubai Foundation. It's a legal structure that can hold your assets, keep them safe, and make sure they're passed on exactly how you want. So, in this video, I'll explain to you what a Dubai Foundation is, how it works, who is it useful for, and the step-by-step process of setting this up. Before we start, my name is Shiraz Wahid and I'm the co-founder at Lepidus Wealth, where we have helped many of our clients and families with trust, foundation, and other asset protection strategies in Dubai. If you would like my help in doing the same, you can apply for a free and customized asset protection plan by clicking the link in the description below. A Dubai Foundation is a legal entity that holds assets on behalf of the beneficiaries, but unlike a trust, it has its own legal personality. That means the foundation itself can own property, open bank accounts, enter contracts, but not the individual. It's a very powerful tool for asset protection, estate planning, and tax optimization. In the UAE, there are two main places where you can register a foundation: DIFC in Dubai and ADGM in Abu Dhabi. Both are English common law jurisdictions with strong reputation, but they serve slightly different purposes. DIFC is better known internationally and often preferred by families who want to hold global assets and deal with international banks. ADGM is a newer jurisdiction but has a more modern digital setup which some investors prefer. Both jurisdictions allow the foundations to be tax neutral. So a foundation set up in DIFC or ADGM will have zero corporate tax and no personal income tax. There's also no capital gains tax or inheritance tax in Dubai. But the key is knowing when a foundation makes sense and when it will not help you. You should consider a Dubai Foundation if you want to protect your personal or family assets, create a long-term structure for wealth succession, or hold the shares in an operating company without exposing yourself to liability. You can also use a foundation to own international assets, provided you follow the right compliance steps in those jurisdictions. Some families use foundations to centralize control over family wealth. Instead of having assets scattered across multiple individuals or structures, they can consolidate them into one single foundation, governed by clear rules and managed by trusted professionals. This not only simplifies administration but also avoids future disputes. It gives family offices a strong vehicle to enforce values, educate the beneficiaries, and preserve generational wealth across borders. Probate is a legal process of administering a deceased person's estate, which can be slow and expensive in many countries. Foundations help avoid probate entirely. Foundations also give founders the ability to maintain control during their lifetime while laying the groundwork for independent governance later. You can start by being one of the counsels yourself, then step away over time, letting professionals and successors take over gradually. Now, let's talk about the structure. A foundation has a founder, that's the person setting it up. It has counsel, similar to board of directors who manage the foundation. And it can have beneficiaries who are the people who benefit from the assets. You can also appoint a guardian to oversee the council and make sure the foundation follows your wishes. Foundations can be structured to suit different purposes. Some are private for families holding assets and passing wealth down generations. Others are charitable foundations aimed at funding causes and supporting charitable institutions. You can even blend both into a dual purpose structure as long as it's drafted properly. One of the biggest advantages of a foundation is continuity. Unlike a company that can be shut down or trust that may dissolve, a foundation can continue for many years even after the founder passes away. That makes it an excellent tool for succession planning. It removes uncertainty about probate, protects from forced heirship rules in other countries, and ensures long-term asset protection. The foundation charter outlines the purpose, structure, and governance rules. The bylaws are internal rules that define how the council should operate. This flexibility allows founder to tailor the foundation to their specific needs. For example, you can restrict distribution to certain conditions or stage inheritance across different ages. You can even set performance benchmarks like graduation or financial literacy before a beneficiary receives assets. So, how much does it cost to set up a family foundation in Dubai? The total cost, including government fee, documentation, registered agent fee, and other services, usually fall between 7,000 to 10,000 US dollars depending on the complexity. Annual maintenance typically range from 5,000 to 6,000 US dollars. Compared to the long-term protection and benefits a foundation provides, it's relatively a modest cost. Let's now go step by step on how to set up a foundation. First, you need to choose a jurisdiction. It will be either DIFC in Dubai or ADGM in Abu Dhabi. Next, you need to prepare the charter and bylaws. These are the rules of the foundation. Then, appoint the council member and decide if you want a guardian. You will need to submit your application through an approved service provider or registered agent, a service that we also provide here at Lipidus Wealth. Once your application is approved, you will receive your foundation registration and can open bank account in the foundation's name. You will also want to prepare a letter of wishes. This is not legally binding, but it gives guidance to the council on how to manage and distribute assets in the future. It is especially useful in family situations where clarity and consistency are important. The letter of wishes can be updated over time and kept confidential. Now, if we compare DIFC or ADGM, which one is better? DIFC is often chosen by families from Europe or Asia who already have banking internationally. It has more brand recognition and a slightly higher cost. ADGM, on the other hand, is faster for digital setup and slightly cheaper, which appeal to startup founders and tech investors. DIFC offers more traditional trust style features, including recognition by legacy financial institutions. ADGM, on the other hand, offers a more streamlined and paperless process, which can be done entirely remotely. So, your decision depends on the kind of assets you plan to hold and your comfort with the digital system. Both jurisdictions offer full English language documentation, common law court system, and internationally recognized legal framework. They are both insulated from the UAE's mainland laws and are treated independently by international banks and partners. This makes family foundations in Dubai ideal for families and investors with cross-border exposure. In terms of compliance, both are strong. You will need to file annual returns, keep records, and follow KYC rules. But compared to other countries, Dubai makes it very straightforward. There's no requirement for local assets or local directors, and both allows 100% foreign ownership. Foundations must maintain proper accounting records for 6 years, and they should have a registered office in the jurisdiction. Some foundations choose to keep financial statements private, while others file voluntary disclosure for transparency, especially when holding assets abroad. ADGM requires slightly more detail in financial record keeping, which some clients prefer for auditability. Now, let's look at a real world example. A client came to us with several properties in the UK and Dubai and shares in a Dubai free zone company. By placing the shares and a portion of their investment portfolio in the property into the Dubai Foundation, they removed the need for probate, which is the legal process of validating a will and distributing a person's assets after death. Often it is slow and costly, and this step also reduced their exposure to inheritance taxes back in the UK and created a clear succession plan for their children. In another case, a crypto investor who wanted to protect his digital assets from lawsuits and divorce. By placing his crypto holdings under a Dubai DIFC foundation, he ensured compliance, created a legacy plan, and avoided aggressive tax and lawsuit treatments in his home country. You can also do the same, but it has to be structured correctly. You will need tax advice in your home country, especially if you are still a tax resident there. Some countries treat foundations like trust, others don't. So it's important to understand the classification. It affects how the income is taxed, how reporting is done, and whether your structure will be respected or not. Another point is asset protection. A Dubai foundation ring fences assets from personal liability. That means if you are sued personally or going through a divorce, Assets held by the foundation are generally protected as long as the structure wasn't set up in the anticipation of a dispute. Courts in both DIFC and ADGM recognize this separation. This is especially relevant for entrepreneurs. If you run business and something goes wrong, having your personal wealth in a separate foundation can prevent creditors from accessing it. It separates your operational risk from your personal wealth. It also allows you to continue growing your wealth without interruption from external threats. You can also combine a foundation with a holding company or an SPV. For example, your Dubai Foundation owns share in a Dubai Free Zone company. That company holds real estate, operate a business, or own shares globally. This layered setup adds both control and protection. It also makes banking, reporting, and governance much more easier. Foundations are not only for the ultra wealthy. You can start with modest assets and scale up over time. What matters more is the long term vision. If you're building wealth, protecting your family, and planning a legacy, a foundation is one of the most powerful tools available in Dubai. Some clients use foundations also for philanthropic purposes. You can structure your foundation to make donations to causes that you care about, support education, or fund religious initiatives. It provides structure and continuity to your charitable goals. Foundation can also serve as a governance vehicle. If you have a family business, you can place ownership inside foundation and manage transitions between generations more smoothly. You can appoint neutral professionals on the council to act as mediator in family disputes, preventing breakdowns and ensuring long-term unity. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.